After the First World War, the US government's debt increased to 40% of its GDP. American soldiers flooded home from European battlefields. Inflation skyrocketed. Hence, the Fed responded with sharp rate hikes and the real interest rates reached 20%. This wiped out most of the weak borrowers. 500 banks failed in that situation. Industrial production fell by 25%. Do you think it's US story? Let's check what happened in India in 2008 and 9 crisis. In 2008, the global financial crisis hit after the US housing bubble burst. Money stopped flowing across the world and stock markets everywhere crashed. India was not at the center of the crisis, but we still felt the shock. Foreign investors started to pull out billions of dollars from Indian market and the rupee fell sharply and Sensex dropped more than 50% from its peak. Inflation was high, crude oil touched $147 a barrel, and RBI had to rise interest rates. Home loan rates, which were around 7 to 8%, shot up to 11 to 13%. For a 50 lakh loan at 8%, EMI was around 38,000. But at 12%, EMI jumped to 52,000. This sudden rise in EMI shocked many middle class families. Some had to cut down expenses, some delayed other plans, and a few even sold their own homes because they could not manage the EMI. Friends, few questions. What would you do if your home loan EMI suddenly jumped from 15,000 to 20,000 every month? Second question, are you taking a home loan thinking interest rate will always remain low at the current rate around 8%? Third question, how long could your family survive if your income stayed at the same level but your expenses shot up overnight? These are not just number friends, they are real struggles faced by the families in the past. And they could be your story tomorrow if you are not prepared properly. A home loan can either secure your dreams or shatter your peace of mind. In this video, I will show you when it makes sense to make a home loan or take a home loan, what precautions you must follow, and how to manage it wisely. So, without wasting much time, let's start. Friends, the average home loan amount depends upon a lot of parameters, like whether it is a small bank or big bank, location, type of builder, construction house, etc. etc. But as per a report from Bajaj Finance, the average home loan taken in 2024 in India is around 46 lakh rupees. So let's assume it is a 50 lakh rupees considering inflation, and also to make the calculation very easy in this video. Okay, so now, this is just an estimation, friends. Okay, RBI don't publish any numbers who took 50 lakh rupees loan. Okay, so this is, in a source I got a total number of loan application, and after doing some work around, and I got this number. Okay, so that is around 10 lakh people took 50 lakh rupees loan in 2024 in India. Okay, so it doesn't matter whether 10 lakh people took the loan or 15 lakh people took the loan, that doesn't matter. But for time being, consider 10 lakh people took 50 lakh rupees loan in India in 2024. Okay, so now we can divide these 10 lakh people into three categories. Okay, so middle class, rich class, and the ultra rich class. Okay, so I'm using these categories only to explain financial concepts more clearly and not to judge or compare people. Okay, don't feel bad because of these divisions: middle class, rich class, under rich class. I'm doing this just to explain a financial concept. Okay, so now uh, the loan is 50 lakh rupees. The interest rate is, right now in India, the interest rate is around 8%. So most of the people take the loan for 25 years. That is a standard, around 70 to 80% of people, they go for 25 years loan. And when you go for this, the EMI will come around 38,591 rupees per month. Okay, remember, I'm going to use this example throughout this video. 50 lakh rupees loan, interest rate is 8%, the duration is 25 years, the EMI will come around 38,591 rupees per month. So now, how much monthly income is needed to get this 50 lakh rupees loan? Okay, so the loan amount is 50 lakh, interest rate is 8%, loan duration is 25 years. So banks use something called loan safe ratio of EMI. Okay, so usually this number will not exceed 35 to maximum 40% of the monthly income. Okay, so it means if you are earning 1 lakh rupees per month, in hand, you are eligible to take around 35,000 rupees loan EMI. Okay, that is what they follow. So as per this rule, one should have 1 lakh to 1.15, 1 lakh 15,000 lakh monthly income to get this loan, right? Because the EMI is around, as I said in the previous video, it's around 38,000. Okay, so a monthly income of 1 lakh to 1 lakh 15,000 is needed to get this loan. I hope this is very clear, right? Now, this is the monthly expense chart of a person who earns approximately 1.2 lakh in Bangalore. Okay, this is I'm still considerate because there are many things which goes out of this set, but still I'm taking in a moderate way. So EMI will be around 38,500, which means approximately 39,000. So this will be the major chunk of your salary if you're getting 1.2 lakh salary. So housing and utilities around 10,000 rupees, around 8.3%. So housing and utilities 10,000 is bare minimum, because if you buy a flat, monthly maintenance and internet, electricity, water, current, everything will take minimum 10,000 rupees. So housing and utilities 10,000 rupees. Now food and dining and 25,000 rupees. So food and dining means we will go outside, we buy the grocery and we cook it at home, we order food from home. That is, I'm taking only 25,000 rupees. That's also a bare minimum in a metro city like Bangalore. That takes around 20%, 20.8% of the salary. Then the transport is 20,000. So you might have a car and you will be driving, and the fuel cost, and sometimes you take Uber or Ola cab, all those things will consider around 20,000 rupees. That's a bare minimum. So that takes around 16.7%. And family and personal, okay, this again, it depends. It's like any hospital bills and any eating outside or any shopping, everything will comes under family and personal. And lifestyle is 10,000. Okay, so 10,000 is around 8%, 16,000 is around 13.3%. Okay, so this is how a person who earns 1.2 lakh rupees spends her salary in Bangalore. So again, this can vary little bit here and there for a people. So if a person comes with a strong saving and investment background, he might reduce some of these expenses and he can save little bit of money. But most of the people, they will be spending this much of money. And sometimes, I'm quite sure people will use their credit cards to make the additional expense as well. But time being, consider this. But in this case, please note, the majority chunk of your income goes towards home loan EMI, right? That's the most important part. Now, I hope you remember these three categories I discussed in the the just few slides back, right? So first one is middle class, second one is rich class, and the third one is ultra rich class. Okay, so I will give monthly income numbers to these categories. So the middle class is around 1.2 to 1.5 lakh salary, per month. Rich class is 1.5 lakh to 5 lakh rupees per month. Ultra rich is greater than 5 lakh rupees per month. Okay, so this is excluding tax. Okay, so this is Hina and salary or business profit they are getting. So once again, middle class is 1.2 to 1.5 lakh per month. Rich class is anywhere between 1.5 to 5 lakh rupees per month. Ultra rich is above 5 lakh rupees per month. Now, this category of people, especially the middle class category of people, carries huge credit risk. If a person loses, his or her job, high risk of default they carry, as they will not have much of the savings, right? Because whenever they take 50 lakh rupees home loan, definitely they give, maybe, definitely 10 to 20 lakh rupees towards the flat, because minimum a flat will cost around 70 to 80 lakh rupees in Bangalore in 2025. They would have paid a minimum of 20 lakh to 30 lakh towards. I'm taking this is a considerate situation, because many people still take the higher amount of home loan. So I'm still considerate in this. So assume they would have paid around 20 lakh or 30 lakh towards the advance payment. Remaining 50 lakh, they would have paid this money, and they would have spent some money for interior decorations as well. But after that, they will not have much savings, right? So any family emergency or health emergency, this category of people, they are in a big trouble, right? Okay, let's assume their health and profession is in their control. Okay, assume they are doing well in profession wise, they are maintaining very good health. But what happens if there is a credit risk in their country? For example, it is in India. So what happens to them if RBI rises the repo rate to 10% tomorrow? Okay, so home loan interest automatically jump to 12 to 13% in that case. Okay, so don't assume or don't think this repo rate or home loan rate will remain low forever. So you might see, as I explained in the introductory video, in 2008-9 it jumped to 12 to 13%, right? So that thing can happen at any time, because this is an uncertainty world where countries fight with each other with different tariffs. War can happen at any point of time. A natural calamity like an earthquake or tsunami can wipe out the economy of a country, and automatically the interest rate might jump. So whenever, if the interest rate jumps to 12 to 30%, this category of people, they are in a huge trouble, right? That's what happened in India in 2008 and 9 crisis. That's what happened in US as well in 1920, 1930s. Okay, now if the interest rate rises from 8% to 13% on a 50 lakh home loan for 25 years, so your current EMI is around 39,000 rupees per month. But do you know what will be your new EMI? It will be around 56,392 rupees per month. So earlier you are paying around 38,000 rupees EMI. Now you have to pay 56,000 plus EMI. That's an increase of about around 17,800 rupees per month. So almost 46% of your EMI. So approximately half of your salary will go towards the higher EMI. So you will have to compromise on either on housing utilities and food dining. At 13% interest, friends, the EMI shoots up by nearly 18,000 per month, which puts heavy pressure on your monthly budgets and sharply reduces your savings. So if this rate stays at 13%, and if your income doesn't exceed, then you are in a great trouble. Even a small problem at this point of time becomes a bigger problem in your life. No, and whenever you are in this situation, you are just one step away from defaulting. A simple job loss, you will be in a you will become a defaulter. A simple health emergency, you will become a defaulter. A legal case on your plot, you will become a defaulter. Any family issues, a dispute between husband, wife, or any family issues, you will be just one step away from defaulting this loan, right? So this is again, I took an extreme example, 12 to 30%, but you should know this interest rate can vary at any point of time based on the economic situation. So at 8% interest, you will be paying around 39,000 EMI. So if it becomes 9%, you will be paying 42,000. 10% 45, 11% 49, it can go up to 15% 64K. Okay, so now, this is a very moderate. 11 to 12% is possible because many times in 2008, 9, 10, we had this much of interest rate for even for a home loan actually. Okay. So if situation worsens, you will be facing these kind of EMI scenarios, right? So you should know it will take the majority chunk of your salary, right? If you fall in the bottom category. Now, there are 5 ways to cut this EMI stress, friends. Okay. So remember, it is a before buying a house, you should always remember one thing, friends. It is a 20 to 25-year commitment, right? It's not 1 year, 2 year, or 3 year commitment. It's 20 to 25-year commitment. So you should have a clear and mindful thinking before taking a home loan, right? So when you plan calmly, you avoid over borrowing and choose a loan that fits into your income, right? Now, one simple way is borrow less and stay stressless. So always aim to take only 50 to 60% of the property value as a loan. It means if the property cost is 1 crore rupees, so you will have to pay at least a minimum of 40 lakh, by through your savings or investment. Remaining 60 lakhs maximum you should go for loan. If you pay 50 lakh from your savings, it is good. If you take 50 lakh rupees only via loan, that's a good actually. But the maximum amount is 60 lakh. Okay, you should not take more than 60 lakh rupees loan for a 1 crore property, even if the banks are ready to pay higher. Okay, so this means you pay a higher down payment, but your EMI burden will be much lighter. A smaller loan also reduces the total interest paid over the years, friends, and it keeps you financially comfortable. This is the first step. And the second step is manage loan tenure wisely. I've seen many people who automatically by defaultly choose the longest term, like 25 to 30 years loan term, that by default they take it. So you should know one thing, friends. Even reducing the tenure by just 5 years can save you several lakh rupees in interest. Okay, I will tell you one simple example. For the same example, 50 lakh rupees loan, 8% EMI, a 25 8% is the interest period, a 25 year is the duration. So as I said earlier, EMI will come around 38,000 rupees, right? But if you cut the duration from 25 years to 20 years, EMI will become 41,800. Okay, little extra, that is 3,200 rupees extra. But you save over 11 lakh rupees in interest. So just by reducing the duration by 5 years and paying just 3,200 rupees extra per month, you will save 11 lakh rupees in interest. Did you thought about it? No, right? The third important strategy is prepayment strategy. Friends, whenever you get a bonus income or hike, put a part or entire part into loan payment, especially in the first 5 to 10 years. In that case, you will be able to save maximum interest. I will take you a simple example, friends. So the same example, 50 lakh rupees loan, duration is 25 years, interest rate is 8%, EMI will come around 38,591. Okay. So after 2 years, the outstanding balance is around 48.6 lakh rupees. Let's say you got 5 lakh rupees as an advance or bonus or some other from other source. So if you prepay this 5 lakh rupees, then your loan tenure drops from 25 years to 21 years. Okay, it will drop from 25 years to 21 years if you prepay just 5 lakh rupees in the second year. So in this case you save nearly 20 lakh rupees in interest over the life of this loan. So always remember, early prepayments are like fast forwarding your loan freedom. Okay, so step 4 is grow your income alongside the loan. So once you commit to a long term home loan, focus on increasing your income through promotions or side business or smart investment, friends. Because if your salary rises from 1 lakh to 1.5 lakh, just for example, the same 38,591 EMI shrinks from 39% of your income to just 26% of EMI. Let's say your salary jumps from 1.5 to 2 lakh. Once again, your salary, the EMI part will reduces from 26% to maybe 18% or 19% of your EMI, your income. That's a very good thing, right? This sharp drop eases financial pressure, boosts savings, and gives you more freedom for other goals in your life, right? The fifth one and the last one is emergency buffer. Always keep 6 to 12 months of EMI in FD or any liquid assets like liquid Bs or liquid case as a buffer, so a sudden job loss or in health emergency doesn't wipe you out, right? So I've seen few people who keep their savings in a savings account. Okay, so if you keep in savings account, it will not fetch good returns against the inflation. So I would suggest to keep it minimum in FD or at least minimum in liquid base if you have a trading account. So in this way you will be able to, you will have some emergency buffer if things goes wrong actually. Okay, so now the last three important key points are DTI ratio. DTI stands for debt to income ratio. Always ensure your debt EMI will be less than 25%, which means if you are getting 1 lakh salary, your EMI should not exceed 25,000 rupees. That's how you should plan. The DTI ratio should be less than 25%. And second point is intelligent plan. Overstretching, it's like I've seen many people who are comfortably living in 2 BHK house, two people and one or two kid. So just for the sake of showing off to the society, they from 2 BHK they migrated to 3 BHK. That's not a good idea, right? For a people of 3 people or 4 people, 3 BHK is not really needed. And I've seen people, even if they are only two people, they go for a bigger 2 BHK or they go for a 3 BHK with an EMI of 30% to 30 to 40% of their salary every month. No, that's not a good idea, right? Always plan properly. So the last one is again, it comes with overstretching. Know your limits. You should know your limits, right? You should not take the loan, just because banks are ready to give the loan amount, right? So in this way, you should always plan your EMI, home loan, and properly. And before buying a house, always ensure you don't get any issues with the legal risk. Ensure the builder is registered in proper firms and he don't have any legal issues from the past work. So that's all I wanted to say with this video, friends. I hope this video is helpful. If yes, you can share this video with your friends. So I will see you in the next video. Until then, thank you. See you. Bye bye.